Okay, take out question number 19 now. Now issue is 50 lakh, 10% bond. Period is 3 years at the par. Redemption is at par only. Oh, very nice. Now it is at a market term or off market term? Market terms. Market term only. You know, have they told you comparable bond? The other people are giving it 12%. Why you are giving it 10%? Nothing like that. Sorry? Where they have given the market rate? Same, no. See, they have given, bro. Market rate and expected rate is same. That is means at par. Effective interest rate is meant for amortization schedule. No. That need not be expectation. Okay, that's what you expect. But the problem is here your market rate and expected rate are same. Don't look into EIR right now. That's the concept I'm trying to explain you now. Don't look into it and get confused there. Because I'm trying to bring one more element now. The previous problem, my element was redemption was with a premium. So what did we do? That 10 lakhs we expensed it over a period of 3 years. That's why I wanted new EIR, which is nothing but the discount rate only. But I need not discount it because my market rate and expectation was same. And I showed you by discounting that 565, when I discount at 12 point whatever, 15.72, I get the transaction price today. This I showed you. Now this is another scenario where I have got 50 lakh issue. It is at market term only. What is my fair value? Transaction price. What is transaction price? 50. But problem is there is one more element of 3 lakhs. Now what should I do with this transaction cost? If this transaction cost was not there, this question and my first example number 17 is one and the same. Life is very simple. Okay, so they said pass the journal entries. So first is I need to calculate the initial measurement. Okay, when I pass the entry, say for example, how many entries I will pass? You need not do it. You can understand. Can you tell me the entries? Bank account debit to loan. How much is bank? 50. Loan how much? Why? It is at market term. If you want to do the discounting, you can do it. Now comes transaction cost. What is the accounting entry for transaction cost? Transaction cost account debit to bank. How much? 33. See, remember students, transaction cost is not part of the fair value. There are two types of cost called the transportation cost and transaction cost. Whenever you calculate the fair value, you will include transportation cost because transportation cost is going to enhance the capacity of the asset to earn the cash. Like you have got a vehicle which is in Bangalore, and the same vehicle, and there are no hire happening, it is idle there. If you bring that vehicle here, you can hire it. Now tell me, by bringing the vehicle here, did the capacity of the vehicle to earn cash increased? Increased. So, and you can bring it only by incurring the transaction cost. Now to bring, you paid one toll there. That is your transaction cost. Did the transaction cost increase your, say, cost of vehicle earning capacity? Or say forget, you have applied for registration. Registration increase your capacity of the asset to earn the cash? No, it will not change the characteristics of the asset. That's why transaction costs are never part of the fair value. It is an adjustment to the fair value. When you calculate the fair value, okay, again, it's not much relevant here. It is relevant in Index 113. Now you have got a transaction cost here. Now transaction cost is a nominal account. What you will do? Now you have got only two options. Either you transfer to P&L account or you transfer it to the loan account. Now what you will do with this? That depends on what? Classification of the loan. How do you classify this loan? Amortized cost. That's why this option doesn't come. You have to transfer it to the loan account. What accounting entry you pass for the loan account? Loan account debit to transaction cost. That means literally loan is a credit balance. By debiting it, you deducted it from the balance of the loan. That's why fair value of the loan, calculate the initial recognition. Fair value of the loan 50 lakhs minus transaction cost 3 lakhs gives you initial recognition of the financial liability. No doubt, no doubt. You will pass the entry. And what accounting entry you are going to pass now? Bank account debit, how much? 47 to loan 47. But you say, sir, loan is not 47, loan is 50. No. We adjusted transaction cost there. If you want, you give separate set of entries. You pass entry bank account debit to loan 50-50, transaction cost account debit to bank 3-3, loan account debit to transaction cost. Instead of 3 entries, can I pass one single entry? But understand here, 47 is not the fair value of the loan. Huh? 47 is not the fair value of the loan. There are actually 3 entries. I adjusted the transaction cost. And why did I deduct it? Debit credits. Plus minus will come in accounting from the debit credit aspect. Loan is a credit balance. To pass, adjust the transaction cost is a debit balance. You credit transaction cost to debit to loan. That's why you deduct it. Understood? Okay. Now we will have to prepare an amortization schedule. At what rate I am going to prepare? See, in this, by deducting this, what I am doing now, this transaction cost, I will spread it to P&L account over a period of 3 years now. Instead of 3 lakh charging immediately, this loan is there with me for next 3 years. The transaction cost I will spread over next 3 years. How? By changing my EIR. Anything you do, change the EIR. Like you repaid with the higher rate of interest. How did you charge that 10 lakh rupees extra? By changing EIR from 10 to 15.72. You incurred 3 lakh rupees extra cost. How do you charge to the P&L account? Simple. From changing the EIR from 10% to whatever IRR you are going to get. You are paid now. Instead of you pay to the repay to the investors after 3 years, right now you are paid to one taxation authorities. Both are payments only, no? Previously you repaid the premium, this time you paid the tax. Both are payments only. In the previous question, the payment was happening at the end of 3rd year. In this question, the payment is happening right now. But both has to be spread over a period of 3 years. Perfect? This should sit in your mind, students. I am willing to spend any time here. That's why, rather than spending time on that swap and debt equity and all that thing, no? Because those are academic interest. I'm ready to spend 2 years here to discuss and get my clarity into your head. Followed? Now you credit that. Okay, I'll split into 3 entries. My first entry will be bank account debit to loan 50. This is as per my normal logic at a fair value. Then I incur a transaction cost to bank 3. Bank debit here, bank credit here. You can say, sir, you can make it 47. Then I'll pass one more entry, loan account debit to transaction cost. This is why I'm doing, because my loan is classified at amortized cost. That's why the standard says that if your loan is classified at amortized cost, and do you know on day 1? Yes, I know on day 1. Then adjust to the loan. What is the meaning of adjust to the loan? Spread this expense over next 3 years or 5 years of the term. How? Change EIR. Finish. You change EIR, you are expensing it in a different way. If you don't change EIR, You keep this 3 lakh as it is and you charge that 5 lakh, 5 lakh, 5 lakh. Perfect. Now I need an EIR. Have they given me? So you need not calculate. So again, you need not calculate in any of the question. Okay, in exam, maybe one question may be there, we'll see. So if at all I have to calculate, so you understood why I'm passing this 47 lakhs? If at all I have to calculate, how do I calculate? My cash inflow is 47, outflow will be 5,555. So I use this equation and say my EIR is 12.52%. Are you clear? This is what they give you in the examination question. Don't get confused that EIR with the off-market term and all. Because of the transaction cost or the premium element, your EIR will be different. They would have given you in the examination question. Now I need to prepare an amortization schedule. Okay, prepare. Start amortization schedule. Yeah, this you need not work out because it's already given in the question now there. Prepare amortization schedule. Year 1, 2, 3. What I start with? Opening balance 47, because you have to, for this you have to go back to the loan and see how much you credited to the loan. 47. You credited 47. How much is my interest expense? At 12.52 EIR. Amortization should happen. And why that 2.52 extra? Because of the 3 lakh transaction cost. In the previous question, why that 5.72 extra? Because of the premium portion. So this becomes 5.88. How much you pay? 5 contractual. Balance 47.88. So 47.88 is the balance. Interest expense will be 5.99. 5 you pay. Are you clear, India? Sorry? 10%. Contractual cash flow is 10%. This is the independent thing. I told you whether EIR, BIR, whatever on earth, cash flow, contractual cash flows will always remain same. No. Amortization, subsequent entries, end of the year. How much interest expense I should recognize? Again, same original, back to original story. Do we need all this headache? No, no. Tell management, Baba, enter into fair value. Without transaction cost. You tell the transaction cost headache to the buyer only. Don't charge me separately as a transaction cost. Then you would have given me loan at 47 only, no? Okay, so like this, I will prepare an amortization schedule and balance is 0. Now tell me, students, see, there are 3 CCF, 5, 5, 55. At the 10% discounting factor, if I discount this 5, 5, 55, how much I will get? I'll get 50. I'll get 50 lakhs. But I want 47, no. So for this to get 5, 5, 55, I should discount at 12.52. I get 47, my amortization balance. Understand? Spend time today after second half, no other job. In and out of this, from where what is going to come, that you have to study. Because next class, when I'll show you the study material questions. Perfect? Yes, so we'll move on to the next question. You issued how much? 50 lakh only. 10% contractual cash flow. Term is 3 years. How much is the transaction cost? 3 lakh. Oh, the moment you see 3 lakh, you should look in the question, have they told you EIR? By now, I hope you are very much clear about it. The moment you see this, look in the question, have they told you EIR? Because 10% or whatever discount factor cannot be used now. Redemption is at par only. Good. Market is 15%. This is an off market. That means I cannot, my fair value I have to calculate this time. The CCF. What is my CCF? What is my contractual cash flows here? 5, 5, 55. Redemption is 50. No. Contractual cash flow is 5, 5, 55. But fair value is not 50 now. Why? It would have been 50 if 10 and 10 would have been same here. Since it is 15, at 15 I need to calculate. On top of it, Gaya the mele bare, we say. First of all, Gaya means wound. On wound, no, somebody puts some namak or chili. Transaction cost also comes into picture. Because if this was not there, your EIR is your market rate, 15% only. If this was not there, coupon rate is 10%, expectation is 15%. At what rate you will amortize? 15%, because that's what you discounted. But now they will put one more chili there. There's a transaction cost is also there. The moment transaction cost comes into picture, you need one more EIR which is more than your discount factor. And that 3% difference, no, which they are given, is you to amortize this 3 lakh rupees extra. Okay, understood the concept? See, when you, this is an off market, this time, first time I have come across this is an off market. The moment it is an off market, you take the market rate of interest for discounting and you discount 555. This is my contractual cash flows at 10%. At 15% you discount now. Will you get 50? No, you will get less than 50. Because more the discount rate, less the present value, no. You get less than 50 now. Really? Understanding? So now, say for example, 47 is my, for example, is my, I'll tell you one exact figure. 41 is my fair value, say for example. Sorry, not 41. If I discount, say 44 is my fair value. That means 5555. If I discount at 10%, 50 is the fair value. 5555 discount at 55%, 44 is the fair value. Now what is that differential 6? Loss. I have to look into now what it is. Fair value loss, L1, L2 input. If it's L1, all the story. Now, on top of it, one more 3 lakh is there for your transaction cost. Now this 3 lakh is going to reduce now, 44 minus 3. Because when you got a transaction cost, you have to reduce from the fair value. 44 is the fair value now. Now you get 41. So your amortization is going to start with 44 or 41? 41. If you start with 44, your EIR is 15% because your discounting is 15%. But if you start your amortization schedule with the 41, don't you need one new discount rate to EIR? That is that 18%. The difference between 15 and 18 is this 3 lakh rupees amortization over next 3 years. We'll solve this. We'll try to understand. Yeah, you have doubt? Okay, your doubt is, why can't I deduct this 3 lakh from 50 lakhs? Baba, 50 lakhs is the transaction price, not a fair value. Transaction cost has to be deducted from the fair value. So if your market rate and your coupon rate is one and the same, then transaction price and fair value is one and the same. So this is an adjustment to the fair value, you have to deduct it from the fair value. So first step is to always calculate the fair value. And to calculate fair value, I need contractual cash flows. So get the contractual cash flows, find the fair value, deduct the transaction cost, get the new EIR, prepare an amortization schedule. This is the beauty of a financial liability, which you have not seen this phase in financial asset. Financial asset is fairly simple. Where is the transaction cost? There is only off market, at market. Off market, then discount rate. If it was transaction cost was not there, do you see is there any difficulty here? If this I would not have given you, do you have any difficulty? This is replica of a financial asset, no? 55, you discount at 15%, then amortization schedule you prepare at 15%, finish. Understood, no? Sorry? If transaction cost is wouldn't be there, then only market rate, no? Then this is a financial asset replica, no? Life would have been very simple, no? Because transaction cost has to be spread over next 3 years. That's why you cannot use this market rate, which you have used as a discount factor, no? You cannot use it anymore for amortization schedule. For this amortization schedule, you need one new EIR. So that it balances. The amortization schedule balance becomes 0. It will solve this problem. You should get better understand. Okay. First, one calculation of the fair value. Yeah, sometime maybe I might have told little more here. All this so much complications you don't expect. As you solve problem, you understand what type of problems come. But I wish you know all these differences very clear. Follow? No, these are only examples. Don't worry about it. Let us see whether are you comfortable with the examination question, study material question. Because I have given you so many variants. Now, what is my fair value? Year 1 to 3, 3. What is my CF cash flow? 5 lakh. Okay, I will write just 5. 50. 5 and 50. What is my present value factor? At 15%. Yes, sure. Clear now? So how much it comes to? 2.283, 0.658. So total comes to 44.31. Did you get this? Therefore, what is the difference? 50 minus 44.31 gives you 5.68 or 69. What you will do with this difference? P and L. L1. If you know, you can amortize it on straight line basis, whatever. Discount on employee loan and all we have done, no? Prepaid interest, we can spread over. You don't have such cases here. So, understood? This 5,68,516. So, you pass one accounting entry, bank account debit. How much? 47. Because transaction cost is also adjusted there. If you want, you can spread it. If you want, it is an example. 2. Loan how much? 41.31. How did you get? 44.31 minus 3. Transaction cost you have to adjust now. In the previous question I showed you. I told you also why we are doing. 2. Fair value loss. P and L. Why? L1. 5.69. So you pass this entry on day 1. Perfect. Now you will tell me, sir, okay, I have to prepare an amortization schedule. What is my opening balance? 41.31. At what rate I will calculate the interest? You say, sir, discounting factor. But if you take now 15%, no, your closing balance will not be 0. Why? Because you should have taken 44 lakh. This you do at 15%, makes sense. But if you take 41 and do 15%, no, you end up how much, you know, can you tell me how much balance will be left? 3 lakh will be left, exactly. Are you clear? If you tell me this, clear no, why 3 lakh will be left? Because you never amortized it. If you want to try this, that's what I'm trying to do, tell you today. Go home and try all these combinations. If I would not have taken that 15%, what would have happened? The closing balance will be, okay, this is EIR, which they have given in the question. They will give you 41.31, 555, 55, gives you 18.9. If you prepare an amortization schedule, yes, prepare the amortization schedule. I start with 41.31, right? Amortization schedule. Year 1, 2, 3. What is my opening balance? 41.31, correct? 41.31. What is my interest? 18%. 18, no, because the transaction cost got adjusted for this fair value. Is this 41.31 fair value? 44.31 is a fair value, no. Is 41.31 is a fair value? No. 44.31 is a fair value. That's why if you take 41.31 and amortize at 15%, then balance 3 lakh you will get here instead of nil. So 41 at 18% only you need to take 7.43. Cash flow how much? 5. Amortized cost will be 43.75. 43.75, 7.87. Again you pay 5. 42.62. 42.62, 8.37 star. 55. This becomes nil. If you don't take 18 here, if you don't take 18 and take 15, then this interest will change, and here you end up getting 3, and you will wonder, how come I got 3 here? Amortization schedule should have closed. Then you realize, oh, instead of taking EIR of 18%, which is new IRR for adjusting transaction cost, I have taken 15. That is cash flow. What you calculate, that's contractual cash flow. This is independent. Your EIR is there, transaction cost is there, another thing is there, third thing is there, doesn't matter. It's not going to get affected. But at 18%, if you discount these 3 numbers, you get this opening balance. But this is not a fair value. If you want to get a fair value, then these 3 numbers should be discounted at 15%, which is 44 lakhs. Since you adjusted 3 lakhs, you get 41 lakhs. But 41 lakhs, when you unwind the discount, you cannot use at 15%, because since you adjusted the opening balance. That's the crux. If you have understood this, problem is solved. Clear? Yes, well, one more example we'll see. So this is the amortization schedule. Your balance got closed. Now, you have issued 50 lakh, 10%. What is 10%? Coupon rate. Total is 3 years. What is your transaction cost? 3 lakh. Okay. The moment transaction cost, look for EIR. Because transaction cost will get adjusted with the fair value. Redemption is 20% premium. Now the market rate of interest is 20%. Chalo, it's an off market. Then which discount factor will you use? 20% you will use to find out CCF. What is your CCF now? 565. So you will use this 20% and find out the fair value. What about this? Deduct it from the fair value. This becomes your starting point for your amortization schedule. At which rate you will amortize this? Generally, you will amortize at the rate at which you have discounted. But since you are adjusted 3 lakhs, you will take 23 point. And the difference between 20 and 3.05, that 3.05% increase has happened because of this 3 lakh rupees adjustment. Followed, no? That premium is already sitting in this 20. No? You will ignore it when the market is 20%. Your IRR is meaningless then. I was expecting this question. What about the premium? Premium is sitting in this 20%. Again, separately, I need not calculate here. You ignore that. No, because you actually ignore this 10%. So, what should I do? Yes, are you clear? If we are that is a financial transaction decision. No, see, we are not concerned. We are accountants here. I am telling you. Okay, should I take this loan or not? That we in AFM we have to discuss. There are financial metrics will come. Okay, which loan is better? Which NP? Then I may probably go, if I take this loan, how much is my total cost? Versus if I take this loan, how much I take total cost? Whichever is low, I will go for it. Is it not my financial AFM related question? I am not going to do it because this decision is taken by somebody else now. They have taken a loan and presented a paper to me. My job is just to account it the way signature has happened on the contract. Whether which one should have gone, I am not a guy to discuss. Followed now? Maybe in interdisciplinary, a genuine interdisciplinary, they will give you 2 cases and say, which one you will go and how do you account it? That is true interdisciplinary, multidisciplinary, where you have to apply your financial management principles and say, I will go for this. And you use your accounting knowledge and say, I will account like this. Beautiful, no? Beautiful, right? Excited, no? No, no, don't worry. They are not going to ask you like this. Initial days, at least next 1 to 2 years, I believe their multidisciplinary is, I don't know, it is simple, Baba. Simple means it's simple actually. What I am expecting, no, definitely is going to come after 2 to 3 years. Today, you can bifurcate very clearly. It has got no relation. One question has got no relation to the second one. Okay, they will ask you, will you take this loan? Yes or no? Yes. Then second part is the question is for FR, but totally different question, not connected to this loan. A true multidisciplinary is they will give you case study and say, take a decision, do the accounting, which is yet to come. So don't worry, your attempts will be done by that time. Okay, what should I do first? Fair value. Okay, what is my fair value? Year 1 to 3. Year 3. What is my cash flow? 1 to 3, 5. Year 3, 65. Sorry, 60. Because I told here, no? Present value factor at what rate? At what rate? 20% market rate of interest. So 0.579 annuity, sorry, 0.579 and 2.106. Okay, this is examples. Don't worry much about this. So present value total, when you multiply this, you get 45.27. 45.27. What is your difference? 50 minus 45.27 gives you 4.73. What you will do with this 4.73? P&L, assuming L1. Done? Yes, Vishnu Priya, clear? Next, what should I do? Pass the journal entry. What is my journal entry? Bank account debit, how much? How much is my bank account debit? 47. Transaction cost is there. 2 loan 40. 45.27 minus 3. 42.27. 2 fair value loss P&L. How much? 4.73. Clear? Yeah. So you would have been passed this accounting entry. Yes. You would have passed this accounting entry because fair value, actually, is this fair value? No. This is adjusted. This is my fair value. So amortization schedule, I start with this. So now I'll go for the, okay. Generally, they'll give you EIR. This is what they have given. This is the outflow, this is all inflow. So again, you need not do it. They will have given in the question only. Yes, now we'll prepare amortization schedule. Last. This is the last question, okay? Then we'll continue tomorrow. Year 1, 2, 3. What is my opening balance? 42.25. What is my EIR? 23.05, not 20. Because you have adjusted here. 9.73. What is your CF? 5 contractual coupon rate. Amortized cost 46.9. You understand now how much practice is required now? How much clear thinking you need to have? Your mind should work very fast, very clear. People will try to confuse you. And you have to meditate, okay? Your thinking clarity comes only after meditation. What is meditation? Paying attention. More you pay attention to the subject, to the problems, more your thinkings are going to become clear. If your mind is wandering here and there, nobody can help you. in either in the past or what is going to happen in the future, how my life will be, or I have to pass right now. Nothing is going to help you, student. The only thing which can help you is, the only thing what you control is your thoughts. Bring that thoughts on the subject matter. That is like a meditation. The more you bring, your thinking will become very clear, crystal clear. Then lot of demons will come in the examination question. EAR is this, it seems. Fair value is that, it seems. You will, like a saint or a warrior, just look at it and solve it. Chalo, done. And you know it. You know it when you're doing it, that it is correct. Followed, no? Nice, no? Do it. Achieve it. Achieve it. Anybody can get it. 46.99, 10.83, again 5. So this is an administrative. See, if you have understood this concept, just everything is child's play. Perfect. Very clear? Yes. From next class, we'll probably start with the study material question. Then we will see the actual terms what they use. Okay, we start with the issue of product. Probably say 22.